George, if I want to know what's really going on inside China, you're the first man that I wind up turning to. Is this trade deal enough to stimulate domestic demand for China?
No, I don't think it will be. I mean, it might at the margin. I mean, because we don't really know exactly what's going to happen yet. I mean, I think there's still a kind of a degree of uncertainty about whether it's going to come into being, and if it does, how long it'll last. But it may have some short-term effect on kind of bolstering business confidence and exports in China, particularly to the extent that there were to be a kind of a very rapid recovery of U.S. agricultural exports to Chinese agricultural exports and imports from China and kind of reverse flows to the United States. But I think these are really all at the margin. I don't really think it's going to have a material impact on China, and the bigger forces are domestic, not external, really.
George, one rhetoric over the weekend was that one of the big wins in this Phase 1 trade deal is that China would support a stronger currency, which then helps the dollar weaken, which is then a win for the U.S. Is that a nuance in this deal that you see?
To me, to be honest with you, it's an irrelevance. I mean, of all the things that they appear to be on the agenda between the U.S. and China's administrations, I mean, I just don't think that the currency has any, or the currency commitments really have any kind of relevance that isn't covered by other pledges and policies that are already in situ. So nobody seriously thinks that the dollar exchange rate against the yuan is, seriously overvalued or undervalued. It's just not an issue. So I know that it's politically perhaps significant to get something on paper that says that, there's going to be some sort of mechanism to ensure appropriately valued currencies, and there's a mechanism in place to adjudicate that. But it's just not a big issue, to be honest with you. It doesn't really affect the relationship, the commercial relationship between the two countries.
So then what about the rest of Asia? So what areas in Asia is this actually good for that might stimulate external demand for China to help offset that weakening economy?
The only thing I would say about that is that, of course, if it comes to pass that the trade between the United States and China were to materially alter during the next several months, which would have the effect of narrowing the U.S. trade deficit a bit, in the bilateral trade deficit. So America's deficit vis-a-vis China would go down a bit, and China's surplus vis-a-vis the United States, obviously the counterpart of that, would come down a bit. I mean, that's purely a bilateral relationship, and there will be an offset, dollar for dollar, to that change in China's and America's trade relationships with other countries. So I don't really see this as being a kind of a net gain, really, for the rest of the Asia or the rest of the emerging world, because I think that to the extent that the products flows change, in one direction, they'll kind of be compensated in the other direction. So the deficit from the American point of view may narrow vis-a-vis China, but it'll increase vis-a-vis somebody else, and similarly we'll see that in the Chinese flows as well. So I just think it's really it's very politically tempting to make a big deal out of this, but in reality, I think it isn't really going to do very much in the big scheme of things in terms of bilateral trade or in the relationship.